guys, this is Manoj Maheshwari once again from Market Ideas for Profit. What I'm presenting to you today is a macro analysis of the SGX Nifty, which is the mirror image of the Nifty, which is run at the Singapore exchange and where most of the FIIs trade. People who don't want to trade in India and people who want to take the advantage of the 24-hour trading systems of the Nifty, simulated Nifty in the Singapore exchange is the SGX Nifty. Now SGX Nifty, why? Because it has a bearing on what happens to the markets in India. So the open that we track, beyond our trading hours in India, is tracked by what movements we see on the SGX Nifty in sync with what happens in other indexes in the world, like you can say the Dow Jones, the Nasdaq, the S&P, and once these indexes move, the effect of their movements in the non-trading hours is reflected on the SGX Nifty. So the SGX Nifty acts like a lead indicator to what can happen on the Nifty. So it's a good idea to track what's going to happen there, because that gives a broader perspective of what's going to happen beyond the trading hours. And so I tend to use the analysis in SGX Nifty to determine what's going to happen with the local markets. So getting on with the analysis, we have two areas here. The macro period that I'm taking is from 16 June to 17th October. 16 June because it was the significant lower bottom that we made, and 17th October, which is the present day. Now I have divided these two areas, the two periods into two areas, depending on what was the movement that we found in a particular area and when we broke out from a certain area and then we moved into another area. So around the 27th of July, the Nifty took a breakout from the first area and it moved into the second area. This is the first area, and the equilibrium here is at 15,733, and in the second area we've drawn a new volume profile to make us understand what's happening here, and we find that there's a balance that has been formed in this range from 17,200 to 18,000, which is the 800 point. Now what happened here was somewhere in the third week of September we had a fall from the balance area, and we went lower to tag the top of the low of the first level that we saw, which I'm highlighting here. We tagged that and we found some support there and we bounced back, and then we had a double bottom test of the same level on the 14th of October recently, and from there we have shown a fantastic bounce of close to about 700 points in a matter of 3 days. So that's a significant move that we're seeing in the SGX in the last 3 sessions. And what we're seeing here is that the initial balance that was created in from the 28th of July to date, the initial balance, not the initial balance, but the balance, which is the 70% of all trades that took place in that period, has happened between 17,250 and 18,000, and we have now gone back into the balance. And the tendency of the price is, once it breaches one end of it lands into one end of the balance area, it generally tags the other end of the balance, which is an auction process of trying to find the equilibrium or the existence of buyers and sellers in the balance area. So everybody in the balance area who has traded gets an opportunity for a retest of the levels that they have entered their respective trades in that index. So given that context and given that recurrence that we see on all balance areas, we are now very confident to be able to predict that we can see a tag of 18,000 in the coming days. There is a barrier at 17,550 which needs to be taken off, and it could act as a resistance, and we could see a fall from there, and maybe a bounce back again from these levels should take us higher to the 18,000 levels. If you see this channel that I have built, this is where the price had been trending from 19th of August to date, and we have formed a sloping channel in which the price has been trending, and we have this middle resistance line which has been acting as resistance and support for the prices when they move within this area. And we have, with our action in today's trade, moved out of the channel and try to create a breakout. Now this breakout first target is the 15,550 level, and then we may find that it gives us some kind of a dip and goes ahead to test this sloping trend line, and then we see a bounce again. So this is a possibility. I cannot say that this will happen, but this is a possibility, and we could track it in this manner. It could go up, it could go down, and then we could go back up from here, and then we could retest this level, and we could tag 18,000. Now this is a scenario that is possible to happen, and it can happen in 2 days, 3 days, 4 days. I cannot give you a timeline to this, but this is how I see SGX Nifty moving. Now there's a caveat to this. SGX moves on in a 24-hour basis, and we may not be able to trade these levels the way I've shown them here, but this gives us an idea as to what the trajectory of our Nifty is. If the SGX is going to cross 18,000 or reach 18,000, Nifty will also follow and try and get to that level, is what we're trying to understand, what I'm trying to say here. So this is an analysis of the SGX Nifty. I hope you get an idea of what could be the possible move in Nifty based on what happens on the SGX Nifty. We definitely have had a great day of trading today, and the volumes have been large, and we have broken out of a channel, and we have broken into a balance area, and now hopefully we should go to the other end of the balance area, which is the 18,000 level. So we could be seeing Nifty at 18,000, maybe even before Diwali. We could have a great Diwali this time. 2022 could be a great year for us. So here's wishing all of you a great Diwali, and hope we tag the 18,000 before it. Thanks for watching the video, and hopefully you should take advantage of this analysis. Thank you.